In this video, I'm revealing a simple pullback strategy that will change the way you trade. So without further ado, let's get on with the video. First, let's start with the basics. What is a pullback exactly? A pullback is simply a correction that happens in an existing trend. And so, why is it so important to understand? Let me give you a scenario. Let's say that the current market is on an uptrend and you're looking to enter a buy position. Now, if you're an experienced trader, you would know that it's quite rare for a trend to move in a continuous upwards direction. Most trends will actually look like this, where the price is making a series of higher highs and pullbacks. And so if you took a position when the price is making higher highs, there's a chance that a pullback or even a trend reversal might happen. So instead of taking that risk, it's safer to wait for the trend to make a pullback before entering a position. This way, you are essentially buying the trend at a lower risk. Now, I know what you're thinking, but how would I know that the pullback will end here and not just continue downwards? Well, based on my research, I actually discovered 3 common levels where a pullback usually ends. And the first level is support and resistance. Let me show you an example. Over to the left, we saw the price rejected this level multiple times, which makes this an area of resistance. Next, the price broke out of the resistance and made a pullback. Notice where the pullback ended. The previous resistance now turned support. And then, we saw the price went up even more and made a pullback once again. And where did the pullback ended? The previous resistance now turned support. The same concept also applies for downtrends as well. Moving on. The next level where the market tends to pull back into is the trend line. So in this chart, we spotted a downtrend, and so we can place a trend line above here because price rejected it multiple times. Now notice that the price made a pullback towards the trend line and went down. Pullback towards the trend line and went down. So that was an example of the price pulling back towards a trend line. Another level where the market can possibly pull back into is the moving average. Here, we spotted an uptrend, and so we can apply the 50-period moving average as our key level. Now remember, for this specific example, we're using the 50-period because that's what the market is reacting to in the past. Markets can also react to other periods like the 20, 100, and 200 period. So you need to adjust depending on what the market is reacting to. And as you can see, the price made a pullback towards the moving average and traded higher. Pullback towards the moving average and traded higher. And that was an example of the price pulling back towards the moving average. Now, there are also situations where you can find multiple levels in one chart. Like in this example, we have the 50-period moving average applied and the price pulls back. But notice that there's actually a level of support intersecting here. This is called an area of high confluence. And usually, when price approaches an area of confluence, there's a higher chance that a reversal will form. But keep in mind, you cannot blindly enter a position just because the price made a pullback towards a level. Prices can still break through it and continue downwards. And that is why you need to use other confirmation techniques before entering a position. And one of the confirmation techniques that we can use are candlestick patterns. Let me show you an example. So here's a current downtrend as prices made lower highs and lower lows. Next, we have the 50-period moving average applied as our key level and a resistance line intersecting it, which makes this an area of high confluence. Now, as price made a pullback towards the confluence, you're looking to see if the price would show some type of rejection. And what we got was a candlestick pattern in the form of a bearish engulfing pattern, which is when the second candle's body completely engulfs the previous candle. So what this shows us is that, at first, buyers pushed the price all the way up, creating a medium-sized green candle. But then sellers stepped in and started pushing the price back down, even as far as surpassing the previous candle's opening price, which indicates that there's a strong selling pressure at this area. And if you want a stronger confirmation, you can wait for the next candle to form, which happens to be another big red candle. So this is a good opportunity to take a short position. So let's show this again on another chart. Over to the left, we spotted an area of resistance as prices rejected this level multiple times. Then, we saw the price broke out of the resistance and made a pullback. Now, to confirm that the price will actually reject this level and continue upwards, you're looking to see if there's some type of rejection at this area. And what we got was another rejection candle in the form of a hammer, which is when the bottom wick is sticking out. So what this tells us is that at one point, sellers tried pushing the price all the way down, breaking the support level, before buyers starts coming in and pushes the price back up, indicating that there's a strong buying pressure at this key area. Now, to further confirm that the price will continue upwards, the next candle after that was a big green candle. And so this is a good opportunity to take a long entry. So to summarize, the key here is simply finding candlestick patterns that signals rejection. Moving on. The next confirmation technique that you can use is called break of a trend line, and this is how it works. In this chart, we have a downtrend and a trend line drawn as our key level. Now, as prices made a pullback towards the trend line, we want to confirm that the price will actually reject this level and continue downwards. We can do that by drawing another smaller trend line right at the pullback. Once the price broke out of the smaller trend line, that's where you want to enter your sell position. So let's show this again in another chart. Here's an uptrend and we have our trend line placed below it. We also spotted a resistance line here, which makes this an area of high confluence. Now, as price made a pullback towards the confluence, you draw a smaller trend line above it. And to confirm our signal, you need to wait for the price to break out of the smaller trend line. Once this happens, you take a buy position. Now keep in mind, if you found a setup where it's not suitable to use the trendline breakout technique, don't force it. Instead, you want to use other confirmation techniques. In this case, we saw a bullish engulfing pattern, which means we're using candlestick patterns to confirm this setup. That is why it's important to master multiple confirmation techniques so that you don't just rely on one strategy. So if you found a market that doesn't support a particular strategy, you can always use the others to avoid missing trade opportunities. Now moving on. Another confirmation technique that you can use is with the RSI indicator. But first, you want to edit the RSI by going to settings and change both of these values to 50, which creates a single line in the middle like this. And this is how the strategy works. Here's the USD CAD with the RSI indicator applied. And as we look to the right, we saw the price rejected this level multiple times, which makes this an area of resistance. Next, the price broke out of the resistance and made a pullback. Now, you're looking to see whether the price will actually reject this level and continue upwards. The way you do that is by waiting for the RSI to cross above the middle line. So this will be a good long entry. Let's show this again in another chart. Here, we have a downtrend and the RSI indicator applied. Then, we saw price rejected this upper area multiple times, meaning we can place a trend line above it. Next, we also have your clear level of support, which makes this an area of confluence. Now, as price came back up to this level, we want to confirm that the price will actually reject this level and continue downwards. We do that by waiting for the RSI to cross below the middle line. So this is a good opportunity to enter a short position. So, I just revealed to you a simple pullback trading strategy that you can immediately use right now. And all I ask for in return is for you to invest 2 seconds of your time into liking the video and subscribe to the channel. It literally takes only 2 clicks, but it means so much to me. And you can also check out my other videos as well. So thank you guys for watching and I'll see you in the next video.